Hi, so we're going to talk about the Ripple again. I made an update recently about shorting Ripple to the previous low all the way down to below $1. And I'm going to do some explanation about my idea in terms of both the short-term movement and the long-term movement and why I think so. Okay, so let's remove the indicators. Okay, so if we don't even count the Elliott waves, we can see that we're obviously still in a downtrend. Like, even let's say when we were in a bull market, when we had a pullback, it still means even if we had a pullback, the market trend is still bullish, right? The market trend as a whole is still bullish. Same for here. Even if the market goes upward in a major downtrend, it doesn't mean the market is bullish. The market is still bearish, in my opinion. Okay, so that's really important. This is probably one of the first questions you should ask yourself before entering into a trade, any trade for that matter, is that you should ask, so what is the trend? Am I trading with or against the trend? And if you're trading against the trend, that means you're trading this, right? You're trading against the downward trend. You're trading this, or long position against the downfall, against the downtrend. You're trading against the trend, against the downtrend, right? This means your trade would be a shorter time frame, and it would also be riskier because you're betting against the market movement. You're trading the opposite as the market movement. So an idea would be a lot of newer traders, their strategy is just hold, right? And that will work out because in a bull market, they are trading with the trend, even though they don't ask themselves that sometimes. But what happens when we turn into a bear market? They hold and they lose all their earnings because they don't lock in profits, right? So if your initial strategy is to buy and hold, so as a long-term investment, you shouldn't even be looking at the chart. You should just forget about it, right? So I imagine if you guys are checking the update of the price action, you guys are supposed to be traders. And whether or not you guys are an experienced trader or not, simply holding and looking at the price drop is not a good strategy. That's just simply not an optimal strategy, right? Okay, now with that being said, and justifying my idea that we're still in a downtrend, let's look at some indicators. So EMA 50, MA 50, you can see, even though EMA 50 might make an attempt to cross over, you can see that I don't think it will, right? Because we're down ticking from this uptrend, from wave 4. I think this is wave 4. I'll talk about this soon. Anyways, we're still trading about below EMA 50 on the 4-hour chart. And if we take a look at the 6-hour chart, same here, right? This is why I think we're still in a downtrend. We're still in a bear market. So take care if you guys are going for a long position, right? And for those people who, most people, I guess, disagree with me in terms of my analysis that I think Ripple would drop again to at least around here, right? I think it'll test the swing low, the previous low again. Why do I say that? This is because I can clearly count wave 1, 2, 3, 4, and 5, right? I don't know where 5 will end, but it's important to note that, it's important to note that wave 5 doesn't have to surpass wave 3, right? As long as wave 3 is not the shortest. It can end here, or it can end here. So if we were to enter a short position from here, to be conservative, we always want to close our position, right? So we might even close it below wave 3, just to make sure that we get our orders filled, right? Anyways, the reason why I think that we're going to have another leg going down is mainly because I don't see wave 5 yet, right? And for people that cannot, there's another idea, another way of drawing it that would show that the downtrend is over, which is this one, because I labeled this as wave 1, right? Some people might have think that this is wave 1. Some people might draw this as wave 1, right? So if you draw this as wave 1, what will you think? You would probably think, oh, the correction is over. Not the correction is over, but at least the first leg of the correction is over. There are many corrective patterns, right? We could have an ABCDE triangle wave, we can have a general ABC, but no matter what corrective pattern forms in the future, we don't know, right? This whole corrective pattern, what will form, we don't know yet. But what we do know is the first leg down needs to be composed of 5 Elliott waves. Okay, so if you draw your wave 1 here, you would think the downtrend has ended, right? Not the downtrend. The first leg of the correction has ended. Okay, now why do I think wave 1 is here instead of here? This is a big difference because this is quite subjective, and the way that we draw this will determine whether or not we think there's going to be another leg down, and that'll drastically change your trading strategy. So let me justify my reasoning for labeling here as wave 1 instead of here. The rule is that each subwave of an Elliott wave has to be composed of another 5 wave, right? So each subwave has to be composed of another 5 wave, right? Something like this, and oops, make it, yeah, let's make it blue. And same for wave 3 and wave 5. Oh, yeah. So maybe something like this, right? And same for wave 5. You get the idea, right? So if you were to draw, one sec, let me delete these. Okay. If you were to draw here as wave 1 instead of here, how do you count the 5 waves? How do you count the 5 waves here? I do not see 5 waves here. I do not see 5 waves here. Even if we go to lower time frame, this is a 4 minute. I still don't see 5 waves, right? I still don't see 5 waves. So instead, if we draw it here, we can clearly see the legs. 1, maybe this would be 2. It can be quite subjective, right? Because we're trying to find the peaks and the peaks on the upper side and the lower side. So it could be quite subjective. You could also draw, you might draw it here. In that case, wave 2 will be here, right? But whatever happens, we can count the 5 waves. Agreed? Okay, so I would say this qualifies as a wave, as an Elliott wave, the first wave. And if we see the retracement of this leg of wave 2 here, wave 2, right? We can see precisely retraced to 0.382, as we mentioned in our previous video. And according to guideline of alternation, we can expect wave 4 to retrace to 0.5, 0.618, or 0.786, or would probably retrace more, right? We would expect a further retracement and a longer retracement. See, wave 2 was really fast. Wave 2 was pretty much a simple A, B, C, D, E correction, right? That formed almost a wedge or a triangle. right? And it was very clear. Everyone could have spotted it. And this was our initial post about shorting Ripple. Okay, now that we have wave 1, 2 done, figured out, let's look at a wave 3. Now this is the bottom, right? This is obviously the end of wave 3. If we count this as wave 1 and this as wave 2, this would obviously be wave 3. Now, the funny part comes. This is not perfect because wave 4 should never retrace to the proximity of wave 1. So, if wave 1 is here, right? Wave 4 cannot retrace down to the region of wave 1. That would invalidate the wave. All right? So, if we look, wave 1 is here, right? Technically, we did touch wave 1. But if we look at the lower time frame, we can see that it bounced back immediately. So I'm going to give it a pass, basically. If we look at the 15-minute chart, after the bounce back, we have 5 waves up, and after that, we have an exhaustive end of this wave, right? An exhaustion, forming a wedge-like channel with lower highs and lower lows. Lower highs and lower lows, right? Here, right? So, I would say this is wave 4 because we can show that channel exhausting, and after that, this morning, January 19th, in the morning, we also posted this idea, right? We spotted this channel right here. We said it was going to break down because, for one, we're in a bearish channel. And secondly, oh boy, my trading views. If anyone knows how to fix this problem, please let me know. My cursor is always flashing around, and it's hard to find a precise point that I want to click on. It's been like this for a while. Anyways, so you'll probably draw something like this, right? Yeah, something like this. Or even lower, right? If you ignore the wick, right? Probably something like this, along this line. Similarly, right? And we could see, because what we're trying to predict is a price action, right? And you can't just simply draw 2 trend lines and think, okay, we're just going to trade in between these 2 lines. You always have to look for multiple clues and find confluence between your clues to show that you have strong evidence for whatever you're thinking, right? So in this case, one evidence that I thought that would break up was the volume. You can see the volume was significantly lower than before, even during during the exhaustion, right? And this candle and another clue was the lower highs and the lower lows, and this one was a very significant one. This shooting star candle right here. The shooting star candle is followed by a complete trend reversal, right? Bounce back from the lower trend line, and I believe a lot of people bought here, right? They thought it was a breakout, but it was a fall. It was a failed attempt, and obviously I sold some here, right? Because I knew that this was going to be a false breakout. All the clues told me that this breakout is going to fail. And after we peaked a little bit and had a false breakout and fell back down to the upper trend line, people started to panic, right? The people that bought up here started to panic, and this caused a series of panic dump. We dumped all the way down to here, all the way down to 1.44. In our update and the post that we updated, we had a buy zone of 1.5 to 1.6, right? Because we expected a 1-to-1 leg moving downwards, right? So this height, the y-axis, the height of this box is the height of this leg, right? And if we place it to here, we could expect a buy zone here, right, at the end of the box if we expect a one-to-one movement. But also, why do we know it will drop down to here? Because we know that we're in a bearish market. Because we know that we're in a bearish market. What that allowed us to do is to extend our box a little bit with a little bit of confidence. Because what do we think? We think that people are going to panic, and it's going to be even more than a one-to-one movement. We believe that people would dump even further than a one-to-one leg, right? So it hit our buy zone, and after it hit our buy zone, we were looking for another target to short again, to sell our buy, right? Specifically, I sold at 1.4. I just sold it actually. I just closed my position, and I now have a short position. Anyways, if we look at Fibonacci retracement of this whole leg down, I was expecting, in my idea, I was expecting it to go here. This is my initial sell zone. Sell or opening of a start position. Right? I expected a 0.618 retracement, but it bounced from the 0.382 over here, right? And as soon as it bounced back up, I peaked beyond 382. I sold it because I saw the RSI and the 1 minute chart was going to fall down again. But even if it goes up again, I'm just going to add position and ladder my buys all the way up. I'm just going to keep selling as it goes up, keep selling as it goes up. And no matter how high it goes, even if it goes up to here, 0.786, even if it goes to this price point, I'll keep selling. And in the end, I'll get a base price, I'll get an average price from all the laddering, right? This is the best way to buy or to sell, as a matter of fact. Okay, so let's get that out of the way. Okay, so in what case would, since everything's going fine so far, everything's going to plan, how do we know that we might be wrong? It is certainly possible that that we're wrong on this, right? Because you can never be sure. Okay, so if we are wrong on this, that means we have to completely retrace into wave 1. And I think level 1.7 US dollars would be a good target. Not a good target, but a good stop loss. But of course, you wouldn't just close all your position as soon as it hit here, right? You would wait for a pullback. So that would be a stop loss, let's say just there, and an entry around 1.55, right? Around what we have here. So if we open a short position for wave 5, right? So around here, let's just click the market price with 1.7. All the way down to here, right? So that's a risk to reward ratio of 3.6. You're risking 17 cents per coin to win 64 cents per coin. I would definitely take this trade. And yeah, all in all, I still think we're in a bearish market. And the reason that some people might think the correction is over is probably because they count this as wave 1, which I disagree. I think this is obviously wave 1 because just because this is very strong evidence here. If wave 2 retrace, if you can find wave 2 retrace to 0.382, as we previously drew, and that wave 4 retraced to 0.618. 618, right? Precisely to 618. If we can find this when the guideline of alternation applies, there's a very strong indication that the waves that you drew are correct, are valid. Okay, so one tiny peak, we barely touched wave 1 and bounced back. I would give it a pass in this case. And okay, another thing. So Ripple really went crazy in early December, right? In mid-December. So in terms of these when the market goes crazy, it oftentimes retraces almost 100% back. So please don't be surprised if we touch around, see, the low of 2 days ago was supported by a previous peak, right? Around here, right? This was the support that we had. This was the support that we had, right? I do expect probably we may peak down to here, or this peak downwards. This may be a useful buy zone, right? So what I would do is I would short my position and I would close it all the way here. Probably you always want to be conservative and close your position. I would probably close my short around here, right? As drawn by this tool, and I wouldn't buy back immediately. Even if I do, I would probably buy 20%, 10% of my of how much I plan to buy, and ladder it all the way down to here, right? I can even expect a further downward movement. Okay, now that we're at it, might as well just redraw the extension again. Okay, so if we just get rid of this, if we look at a Fibonacci extension of wave 1, 2, and let's not use that peak, let's use this peak, and let's also use, okay, let's use that peak too, right? Let's use wave 1 through 4, just because, why not? And a wave 2, 3. And we try to find confluence, right? So I would say this is a rather strong zone of confluence. 618 retracement. I don't think it will drop below 30 cents again, but certainly a possibility. So this is probably going to be my buy zone, right? Somewhere around here. Probably all the way down to 40 cents. We will see. But anyways, anywhere below this will be a good buy because I expect a very strong bounce back from wherever it ends. But according to Hofstadter's law, it's basically a theory, not a theory, but an idea that anything that you plan will take longer than you expect. So don't rush. Let the market play out. And if you are still in a long position, I hope you take care and I wish you the best of luck. And that's it. Hopefully I'll be updating soon.